Okay, first of all, welcome everyone to the webinar, what to do when you're losing, right? This is probably something that most people don't go near, all right? And it's because, people who are either in the business of either the brokerage firms or trading companies or even education firms for that matter, no one really wants to talk about the hard part, and that's actually managing the losses. And this is actually not too dissimilar, I've got to say, to really what goes through in the banks. Okay, you're sitting around the trading floors. No one's really walking around and going, "Oh, how you going?" Or because we already know the P&L gets passed around. Okay, so you know who's losing and who's winning, so you don't need to rub it in. Okay, so what we want to do is really have a close look at the structure of what you want to do and how you want to do things whilst you are having a losing run. Now, the first thing you need to do is come back to your technical analysis. Okay, and I've just got the major charts up here. One thing you want to do is make sure you've got good, proper understanding of market structure, right? And when we talk about market structure, we don't sort of go around preaching, it's on the site, on the website and all these sorts of things. We're ex-investment bank traders and we'll show you how the bankers trade. Now, I know a lot of other companies go, "Oh, I've heard how the bankers trade. I'll show you how they do it," and all this sort of caper. The whole meaning of this is it's the market structure of the core traders that are managing most of the volume. Now, if you go back into fund managers, they are structurally different to the execution teams in the trading banks. And they trade somewhat differently as well. Probably, in a generalization, a bit more macro than micro. The traders at the banks, there are certain teams that trade macro. There's also teams, the spot trading desks, which trade the micro and a bit of macro as well, but mainly managing the flows through the day. Now, when we're looking at the general structure, okay, and understanding the structure, it really comes down to technical analysis, right? And everyone that's in the presentation that's come through the training program will understand this. You've got to have your technical analysis has got to work for you first and foremost. So if you're having a losing run, have a look at what you're using to make your trading decisions. Are you using a number of indicators or too many indicators? Okay, now let me just explain for those people who are new to the presentation. Now, I have got stochastics down here. I use this as a gauge just to mainly manage positions, not necessarily as the first point of call for me getting into trades. The one thing I look at for placing orders in the market, and I'm just trying to get the Aussie across here. It's a little bit weird because the currency is so high at the moment, is good, sound technical analysis. And what we're looking for is support and resistance. Okay, that's exactly what we're looking for. And if you go back through, and I know people like back testing a lot of systems, a lot of trading systems. Well, funnily enough, if you go back test all the trend lines that we draw, you will see that they either hold or they break. There's of course times where there's a bit of discombobulation around those levels, and that could be generated from the fundamental part of the market. But generally, when you're looking at the charts, you will see clear levels where you can make trading decisions, and that's what you need to do. So if you're losing, the first thing you need to ask yourself is, where was my entry level, right? Was my entry level correct? Because if you're getting the entry levels wrong, right, well, then that's just stupid. And I don't mean to be sort of brash on that. If I said that to my kids, they'd be sort of saying, "Don't say that. That's not a very nice word." But the fact is, you are wasting money because you are looking at the market the wrong way. You don't have proper structure. So, I'm just looking at the Aussie dollar chart here, but if we go back through and have a look through a number of these currency pairs, okay, check out sterling here, actually. Actually, I just took some cash off the table up there around 27. I'm glad I did now. So look at this currency here. Now I've got quite a few. I've got, say, 2 or 3 trend lines on both sides of the market. Now some of these are secondary, some of them are long-term trend lines, but just look at the structure of these opportunities. Now I haven't drawn this after the event. In actual fact, this is actually a pretty good point, because I want you guys to understand a lot of these things you can actually find on our site. Now, for all those newcomers, okay, we've actually opened up the members area. Now, you're not going to have the training program unless you actually purchase some of the items, but there are 1 or 2 things that we are opening Pandora's box to. And this is some of the stuff that you need to get fine-tuned. And for those members that are coming back and just having a look and have been away for a while, get back in here because the members area has been revamped and it's looking pretty funky. Now, what I'm really talking about is for everyone else, you can get access to the Market Insight page in particular, where, of course, we've got the preview of the trading day. But one of the things I'm looking at is the technical structure each day, and why we post these trend lines in here is because to give everyone a bit of an understanding of what we've got. Now, let's just have a look at what I posted here this morning. Now, Carney is due to speak. If he hasn't already spoken, I think he must have there because the way it traded. All right. So if you click on those charts, right, this is the chart that we did or I posted, I reckon, about 10 or 11 hours ago. Right, what we're looking for is, and this is around building your market structure. I've got the trend lines there. They give me entry positions. The fact that the Bank of England governor's talking, it's a bit of a question mark. You want to keep an eye on that. But the whole thing is the short-term bias is up, right? Now I've got a break. I was suggesting a break trade here to the top side. So what do? We actually placed a break trade to the top side and it went up through this level. We were in the cash about 50 points at one stage. It came back down to almost stopping at me at break even. I ended up taking about 27 points off the table after watching it. So that's the chart there. Now, if I come back to, here's the result, right? Once again, it's not a fluke, but you know, why this was working is because we had structure around the trend lines. Okay, on the downside here, 1, 2, 3, 4 touches. This is a pretty handsome looking, pretty gorgeous looking support line. So once again, one of the main reasons or things that you need to look at when you are placing your orders in the market, where are my order levels? Okay, and once again, you can come back and have a look at any of these currencies. They all behave the same. And why is that? Because this is the way everyone is trained in all the institutions how to do their technical analysis. All right. Now I have got Euro over here, and Euro's been trading a little bit absurdly, I've got to say. You know, it's been 108.20, 114.64. We are starting to throw a few Fibonacci's in here to start sort of gauging what is actually going on here with this thing, because it's a little bit tricky. But funnily enough, if we come back to that members side again, right? This is the whole, this is the way you've got to slow down. And I think, Elizabeth, you were just saying there before, you know, listen to the market, listen to it. You can see it in your charts. You've got clear entry levels and you've got clear exit levels. Generally looking at the market bias, you can get a beat for what's going on. So once again, this is 10 hours ago. What did I expect? Well, I expected Euro just to continually slowly grind to the top side. Okay, and once again, let's go and have a look, see what's happened. So it's gone from where it is, it's gone up about 50 points, straight up. Okay, not much more going on there. Okay, so that's one of the key things. If you are having a losing run, make sure you analyze your performance and most importantly, your entry and exit levels. Have you got your technical analysis working for you? All right. Now, probably the second thing that you need to really question, if you are having a losing trade or a general losing run of trades, I should say, why did you put the trade on? Okay, you've really got to ask yourself, why did I trade? Now, if it was around good technical structure, well, then that's a good answer. And maybe you were just a bit unlucky, and that can happen quite a lot. Okay, so what you can do is make sure you're trading for the right reasons. If you're turning the screens on, and this is one of the problems of people trading for themselves, by themselves in isolation. What happens is you have a day off work, you think today's my trade day, I'm going to trade. Well, that might work well and good for yourself, all right, but what we want to do is, what about the market? Okay, have you considered what the market's doing and how everything else is going? So, you know, the days that are potentially busy, we know when they're on because there's high impacting data releases. All right, these are the events that will make the market work. Now, if you go through a period like, you know, actually this Monday wasn't a very good example because we did have that sort of gapping market in Aussie and Kiwi and a lot of the crosses and dollar yen and all the yen crosses. But generally Mondays are very quiet because there's nothing going on. Now, if you try to trade Mondays, imagine that all the time. If it was Monday, you're like, my God, it can be like watching paint dry. So that's what I'm saying. You've got to wait for the market to trade. So if you're trading for the wrong reason, okay, and if you're just getting, short or long, just because you're looking at the price action, you're thinking, well, you know what, I've got to trade here. It's my day off, and I am a trader. No. You've got to slow down and get in speed with the market, because that's where the cash is. Okay, so what do you do though if you are having a losing trade or a losing run? First thing you do is you stop. Stop trading altogether. Do not continue to trade, right? If you've got a good capital management system, right, and this is where the whole structure of all the training and everything that we do comes into play. It's all these little fine points that actually make you a better trader, right? So what we're talking about is the you need good professional capital management, because this determines your whole trade plan. So stop trading. If you don't have any capital management, well, God help you, because no one else will, or nothing else will, I should say. Now, one of the key things that you need to be able to go through is the structure of all of the drawdown process and how does it work. And what we're really talking about is the trade plan. When you go into a trade, your entry, your stop loss, and your take profit, are they consistent? Are they in tune with what's going on? Do they work with your entry level if it's around technical analysis? Because this is the answer most traders are missing. They're like, well, you know what, I got in, but I just didn't know what to do, and I ran it for like 60 points, and then it bounced 100, and I'm out, and I'm all over the place. Without any structure to your trade plan, okay, and no capital management, this is going to be a very short process for you to be a trader. All right, so what you need to do is slow down, check your trade plan. If you don't have one, go and get one. All right, get on the internet, start Googling, find something, right? I mean, of course, we've got some structure here, and you can come in and buy these individual components, but, I'm not saying we're the be all and end all. We know we've got a lot of experience, but just get on there and start Googling capital management, okay? Because you need specific structure to this and structure to your trade plan. So make sure when you go through your various aspects, you do have a plan. And so part of the plan is, the first step is identifying the technical levels, the entry and or exit levels. And once you've identified those, okay, then make sure your trade plan and capital management suits the opportunity. Now, what you could be doing is you could be loading up on some of these opportunities that are high risk, right? Now, not all trades are the same. Some of these trading opportunities that we have are actually better than others. They're the trading opportunities that you need to leverage up on. So identifying the economic numbers, and I'll just bring up Forex Factory again, okay, like some of these high impacting ones aren't the best ones to be trading. So don't get mistaken, and don't just go and trade the economic numbers just for the sake of it, because some of those can be quite dangerous. You've got to look for the technical setup and the fundamental picture that goes with what's going on in the market. If you can get that structure and the trade plan right around this, that's when you're going to start hitting it out of the park. All right, and it's about reading the market. So once again, I mean, even coming back to that, that market insight page, it's very handy to come back and have a look exactly what we're doing, because you can start to get some understanding around your charts, what we're thinking, why we're thinking about going long certain currencies. Why would we think that? Now, this is the understanding that you need to get, and throw a trade plan on top. Okay, I can't help but think of what we're seeing in the market at the moment. This is simple trading. You've got to slow down to the speed of the market. And at the moment, the market is being very passive. It's been very calm and forgiving, right? So when you look at the the charts, for instance, mate, it's pretty easy what's going on. Now, sometimes you'll know what's going on, and sometimes you won't. Okay, what your job is to identify the opportunities where the percentage is more like 70 to 80% in your favor. So once again, if you're having a losing run of trades, make sure you go back and check, okay, how good was this trade looking? What you might find you end up doing is you might be loading up on the trades that have got high risk, and the trades that have got really low risk and a high probability of success, you're actually having your smallest trades on, and you're actually making your money back. But making your money back, trading isn't about making your money back, it's about making money. All right, so that's where your capital management structure comes back into, and really identifying the opportunities. Because if you can come through, okay, and identify like a high impacting number, which is going to give us specific direction. And like, for instance, this Aussie CPI numbers, it's not out for a week, but that's going to be a cracking opportunity because it has a connection to interest rates and to the RBA, and it will give this Aussie dollar a real kick one way or the other. So that's something we look forward to. Now, it doesn't necessarily mean we load up on it because it's going to be probably volatile at the time. But once again, you get your entry levels right, you get the direction from this puppy over here, and you're on your way. All right, so one of the things that we do as part of our, I should say, part of the mentoring program is actually coming back in and analyzing the trader's performance. Now, there's a number of things that you could be doing here to analyze your performance. One is just jump on my FX book. We were using FX Blue there before, but it's gone a little bit off. But a system like this, now this is a company that's built some really good analytics around overall performance. Okay, so what you want to do is get into this thing and start having a look at your trades, because once you can go in here and identify, once again, the opportunities, okay, what you can look at is you can have a look, say you've had 3 or 4 losing trades in a row. Now, what you want to do is have a look through your performance and work out which currency pairs you've had the losses in. Is it the same currency pair? If it is, I can tell you probably about 95% certain you're chasing your money. Okay, and this is one of the biggest problems for new traders, and I'm talking anyone less than 10 years will do this. If you lose some money, for instance, you may have just lost some money in sterling. And I was lucky enough to tap some out just before this thing crapped out. But, you know, if you lose money there and you're sitting there and it's your day off, you'll start trading just to try and make your money back. And that is a recipe for disaster. When we make trading decisions, and this is what we try and train punters to do, is, okay, look at this situation here. It's providing a trading opportunity. If you're not sure, it's the break trade, right? If you're not sure of anything, it's always the break trade. If you're a bit more certain about what's going on, then that's when the range trade can come in. If you're not sure, it's always the break trade. Now, when you do look at the opportunity, once again, have a look at the currency pair. Okay, now if you've had 3 or 4 losses in sterling, don't trade sterling. It's quite simple. But funnily enough, the simplicity of this may get a little bit bent out of shape, because if you're by yourself, sometimes you don't even realize you're doing it. And you're thinking, oh, you're watching the price action, you're getting caught up in the numbers and all these sorts of things as well. So we are looking at various aspects of the trade and your performance. Look at the time frame that you're trading, okay? With your charts, actually coming back to your charts. Now, I never go below an hourly chart, ever. You know, it's just something what we don't do. I don't even know why they have these other ones there. But, you know, some people can find, if you're trading in a very short period of time and you've got like 2 hours to trade and you're in here sort of banging away. Now, unless you're in a very, very aggressive scalping sort of mode, I wouldn't suggest you go into anything else. Even when if we're looking to scalp around some key levels or using some economic numbers, I never change it below an hour anyway. So make sure you've got your time frames working for you. The other thing you've got to look at is what strategy were you using, and this really comes back to your technical side of things. If you don't have any technical structure and you don't have trend lines and you've got indicators all over the place, well then, as I said, got to help you, because you're going to be inconsistent with your results anyway, because these indicators, you want to use some of the indicators that help you, not the ones that contradict each other and confuse the hell out of you. Like even looking at these Fibonacci's, right? Now I'm using the Fibonacci's here as a bit of a guide to potentially where these, I'm looking mainly at the trend line, but I'm trying to work out here with Euro what's going on. Now, the Fibonacci isn't guiding me anything. These are not as strong as trend lines. Okay, traders use them for indications, but don't get caught up and just have Fibonacci's with moving averages and MACDs and all sorts of things over your charts. The direction for the currencies, okay, you can see the direction on your charts. This thing's going up. This one's going up. Dollar Yen's starting to go up. Sterling's going up. Euro's going up. And dollar CAD's going down. I mean, you don't need anything else to tell you that. What you need to know is where to get in, where to get out, and that's where those trend lines come in. Okay, the structure of your trade plan, of course, that's on top of this, but once again, I'm trying to really highlight and emphasize the importance of consistent, clean, technical analysis. All right, and then you can start to look at the market bias because it's clearly obvious. If you have charts with indicators all over it, you won't even see where the currencies are. Okay, so part of that trade plan and part of your analysis, this is why it's so important. I'll just blow up the Aussie dollar chart there again. One thing that, actually, let me come back to this one while we're here. Now, one thing that you want to do is check your entry and exit levels. And once again, it comes back to technical analysis. Now, one of the key principles of technical analysis is, okay, this line is resistance, right? Until it's broken. And then when it breaks, it acts as support. And funnily enough, what happened there? Cable crapped out from 40 back to 80 to the support, well, the resistance line, which is now acting as support, and rallies again. That's no surprise. And there's another trend line up here to have a look at as well. So don't knock yourself around. Check your exit, your entry, and your exit levels. It's very important. This is connected to your trade plan and your capital, of course. But once again, these things, the factors that impact your performance, and especially analyzing your losing performance, are all in front of you. Okay, and it really revolves around, as I keep saying, your analysis, technically, fundamentally, and your trade plan. Now, one thing that you can look at, and this is, as I was just saying before, but I sat here with this order in the market I closed it out about, I'd say 40 minutes ago, for about nine and a half hours. Okay, it went up to 40. It almost got me stopped out again here, popped back up into the mid-20s, and I took the cash. And I thought, you know what? I'm just going to take the cash, right? The trade looks all over the shop now. Now, if I had to stay in that position, I would have been stopped out here just below 143 the figure, and that would have been unlucky, right? Sometimes you are unlucky. So when you go through your performance of your losing trades and have a look, did you trade for the right reason? Then secondly, okay, why did I get stopped out? You know, number one, if it was in the wrong entry point, well, that could be quite simple. In this situation here, I got in at the right entry point, but I could have just been unlucky. It's a bit of a random move. All right, and I would put that down and go, you know what? Well, there's nothing wrong with my plan, nothing wrong with the structure of my technical analysis. I'm all good. That was just a bit unlucky. Make sure you know that, because then you don't beat yourself up and think, oh, I'm not good enough at this. I'm not doing my homework. I'm all these various aspects. Okay, so make sure you do that. If you're losing money, right, on something like this, and it's because when you go and look at the back end of it, it's because of a main event, a major economic release, or a central bank announcement, okay, well, then that's just silly. All right, so make sure you do check your calendar and make sure if there's an event coming out that you know what the hell it is. Okay, don't just walk into mistakes. So that's the other thing. So with your losses, check the currency. If it's the same currency, you're probably chasing your cash. And even if you're not chasing your cash, get off that currency because you're not going well in it at the moment. Give it a break. Give it 3 or 4 days off. Then come back. Did you get stopped out on a random move, or was it because you just missed something completely? Okay, so, and that's pretty much sort of what you need to do, crew. It's, you know, you just need to be consistent with your approach, okay? Understanding the fundamentals, this is something that you can expand as a trader. You can always get more knowledge or greater knowledge on, okay? It can sometimes work against you. You can almost know too much, and the markets, you know, are just working technically, and they're brushing the fundamentals. But what you need to do is, and this is where I guess it comes back to sort of really looking at, you know, what we're trying to provide here. And as I said, this is what you all need to do. Get some proper understanding of the market structure, what makes prices move, and how to trade price movements. I mean, this is the basis of our whole professional trader program. Don't just look at our stuff, go and research, get some backbones on this, and get yourself skilled. Because if you are having a bad run, you can stop it and make it a good run, right? The good traders, this is one thing that you'll get with capital management actually, is they don't have very big drawdowns. If we have 1 or maybe 2 losing trades, we stop and we make sure the next trade is a winning trade. And what I mean by that is we will wait, whether it's a week, I'll wait for some key numbers, that give me absolute direction, where I've got absolute technical analysis working for me, and I know the bias, that is a no-brainer. And what that does is it doesn't just get my cash back, it gets me back in front, right? So that's one thing you need to do, and it's called dynamic capital management, right? So the traders who have come through the program, you guys need to be up the curve on this and really start to work on your dynamic capital management, because having a capital management system with a nice trade plan is one thing, but being able to use that to the nth degree is the most important aspect. And that's when you start to become professional, because you can have a set profile where you do look at trading opportunities, okay, and you can sort of rate them out of 10, 10 being an awesome trade, right? And this is, once again, goes into the capital management structure of what we've got. But if we look at let me just come back to the trading opportunities here, and we've got some good UK data coming out tomorrow, the UK claim account change, right? The unemployment data, okay, and the average earnings. That's a bit of a cracker. We've got some good levels here on sterling. So what you're looking for is, you understand what's going on technically, you understand what's going on fundamentally, and then you put these things together and then you execute professionally. Now, looking at those opportunities, we can increase the trade size and really hit these things harder than we otherwise would. All right, and that's something that you need to think about as you go forward. So really, you control your fate. If you are having losing trades, stop trading. Assess your performance. Are you doing all the trades in one currency? Are your technicals working for you? Do you have a trade plan? Where are your entry and where are your exit levels? Why did you get stopped out? Was it because of a random event, or was it because you missed a fundamental release? Okay, all these various aspects are what you need to start thinking about to improve your performance. If you are having losing trades, don't just brush them off, assess them. As I said, get up Market My FX book, have a look at your performance on a short-term basis versus long-term. Currency pairs against currency pairs. Work on the currency pairs that you're winning in, right? Generally speaking, okay, we trade all the major currency pairs, and we trade a cartload of yen crosses and euro crosses and sterling crosses, but predominantly we do, most trades in 2 or 3 currency pairs. Okay, what changes is when the trade setup changes, that's when we change the currency pair. We look for the easiest trade setup. So if you're actually just trading one currency pair, then you're asking for some trouble, because at any stage, whether it's the crosses or the majors, these currencies will get difficult at some stage. And if you're continually trading the same one that gets difficult, well then good luck. What you got to do is go through the currencies, find the easiest trade, right? So have a look at your trades. If you're losing, make sure you're on the right trades and you're not chasing the hard currency pairs. Like euro has been hard. That's why I've got those Fibonacci's all over the damn thing. It's actually difficult to assess half the time. Now we've got a nice trend line there now, but it has been difficult over the last 6 months. So that's pretty much it, guys. I mean, and that's where we want to sort of actually have a look at these things. All right. All right. Any questions there? I just got Jefferson in there saying it could be Zulu Trade instead. I didn't even realize Zulu Trade had that stuff in there. There's a few companies, right? So there's a number of companies that you can do this. So don't take my word for it. I mean, FX Blue is a company that we've used before. It used to be MT4I. Okay, then there's so another company there. There's all these different companies who've got these things. They're all free. Okay, so actually try and help yourself, or if you can't actually help yourself, the next thing you do is find someone that can help you, right? And for those traders who have come through our program, this is where the mentoring side of things comes into it, all right? And the whole mentoring, it's actually making sure you are doing the right things, making sure your analysis is correct, making sure you can call the market bias correctly, make sure you are putting the orders on correctly, and make sure you are taking profit when the cash is there, right? This is the whole aspect of what we're doing. It's not here to confuse you. It's actually here to sort of help you. Now, just to finish up, just throw in your questions there, guys, if you've got some questions. I was just going to show you, we've got some a bunch of strategies here, which we've redone some in-depth strategies, right? These strategies will give you a lot more to think about when it comes to trading various markets and various events. So check those out. The other thing is for all those newcomers as well, as I said, you can come to the site now and sign up and log in without, purchasing anything. The other thing is that we have got here is the trade IDs, which we've tuned up as well. So you can come back and always check out, see, at least once a day, we're posting at least one of our trades up. Now, I just noticed euro sterling actually just dipping below the fig. It's been sitting around 15 all day. Now, this is a long-term trend line that I'm comfortable to get into and see how it plays out. The whole idea of trading, it's actually about getting into trades and then managing the trades. If you get in at the right levels, right, this is a pretty good point to finish up on. If you get in at the right levels, you'll have 2 or 3 opportunities to either take some cash off the table or not. If you get in at the wrong levels, right, you don't get the opportunity to take any cash off because you'll just be stopped out, right? And that comes back to the real structure of actually the trade plan and your analysis. Okay, Rob's just got a question here with regards the what's happening on milk tomorrow on the Kiwi technically. Okay, that's a very good point. All right, Rob. Well, funnily enough, we've got the global dairy prices. Okay, so if I just go in here. Now, for those that don't know, milk or the dairy industry is the biggest industry in New Zealand. So the milk prices, Fonterra, global dairy, I'll have to look for that. I'll come back to that. Milk is the most important thing. Fonterra is the biggest company in the world, right? Well, global. Oh, I'm putting in diary now. Heaven forbid. Here we go. This is the page you want to look at, right? So this data, right? So just looking over here, it's called the GDT on this thing. Okay, the price index. This is very important for the dairy industry and the bulk of the New Zealand economy, for that matter. And what you're looking for is a change in the price, okay, of the dairy price. Down here, every fortnight, this thing comes up. All right. So here's the this one. You can come into this and look for more results. Anything above, so the previous one, 2.1%. So say the prices came out plus 7%, Kiwi would rally. It's pretty simple. This is one of the key fundamental releases for New Zealand, for that matter. Okay, so make sure if you are trading the Kiwi, right, and we do come back over here, and this is why I do have this on my charts, and it is something that I would think about when I do go back to check the each day what's coming out through the next 24 hours. I'll have a close look at what's going on here in New Zealand, and in particular, I'll focus on the dairy prices. It's almost like for trading dollar CAD or oil, you want to make sure you're looking at those US oil inventory numbers. So milk prices are going to be the key deciding factor here for where Kiwi goes, over the next 12 hours. So make sure you've got that up on your charts, and there's the website. Once again, you just got to know where to find this stuff. All right, so globaldairytrade.info, and you can see these numbers. You can go through the history of the pricing. Check out the pricing here. It's been sort of crapping out for a long time, and that's why the New Zealand economy's been under the crunch, and that's why one of the main reasons why the RBNZ were cutting rates. Okay, Gerard's got a question. For complete newbies, do we stick to the management plan or do we start with a much smaller amount? Actually, this is a really good point, Gerard, very good question. If you are having a losing run, don't keep trading the same trade size. Decrease your trade size till you have a couple of winning trades. Trading is so much more about confidence than you would believe. Okay, so if you are having losing trades, decrease your trade size for sure. Now, if you're new to trading and say you've got a 20 grand account, well, generally I would say you trade 200,000 or 2 lots to get started, right? You're risking 2.5%. Get into this thing. But if you're actually new, yeah, that's your maximum trade size for the moment. Yeah, just take it back to say 50K or whatever it is. Just get some trades going till you get your trade execution correct, you get your analysis correct, and you get your confidence rolling. Then you can step it back up to the normal trade size. For all those new traders out there, don't feel pressured to trade the maximum trade size that you can get with leverage or even with your capital management structure. When you're winning, you can leverage up. When you're losing, you need to know how to pull back down, and that's dynamic capital management in play. All right, so good question there, Gerard. Base high, is it good to set a monthly loss limit, and how much should it be? Absolutely, it's good to set a loss limit. Now, when you are having a run like this, okay, or you are looking at, so I keep going from one thing to the next. If you actually are having a bad run, what they do in the banks, and this is very important, they have a weekly drawdown limit. If you hit that weekly drawdown, you are stopped trading. They have a monthly drawdown. If you hit that, you are no longer trading for the rest of the month. If you hit that 2 or 3 times in a row, they just sack you. All right. So what you want to do is make sure you understand the drawdown process, and really, as I said, the dynamic capital management. So if you have got a 20 grand account, right, and say you lose 10%, right, over the course of a couple of weeks, I would generally say have a break. You got to stop. In actual fact, even if you got to 5%, give yourself set levels that allow you to work in those parameters. If you don't give yourself monthly loss limits, or even weekly loss limits for that matter, you will keep going until the pain is too much, until your account can't come back. So absolutely, it's a great idea to set monthly loss limits, right? At the same time, have monthly goals. You've got to set yourself some goals here, otherwise it's not going to go through that process. All right, so you've got to have targets, and this is one of the key processes of keeping you on track. Once I'll just go into a part of this. Actually, I'll just turn the sound down. One of the key things is with the draw up process, it's about having goals to achieve. That's the most important thing. A lot of people don't have goals and they don't have take profits. So if you are having losing trades, make sure you set your goals in play. Okay, it's absolutely important. And just as important for that drawdown process, you have targets which should indicate you either stop trading for the short term or decrease your trade size, or both. Okay, it's very important. All right. So what do you do when you're losing? Well, there's a number of things to do. It's about the steps, and it's about capital management and trade plan and structure to your overall analysis. All right. This is where understanding market structure, understanding why the currencies move, and how to execute with good, solid capital management, that's your success right there. And so look at this, the screen in front of you there. These are some of the specific draw up levels that we have if you're starting with a 10 grand account. Now, what they do is they keep you focused on the goals ahead, right? You make 5 grand, you double your trade size. All of a sudden, you've gone from making $750 to $1,500. If that can't get you focused on the next trading opportunity, I don't know what will. So when you are losing, as I said, slow down, go through your analysis, go through all the currency pairs. Don't get lazy and just do 1 or 2. Go through all of them, right? When you go through methodically and habitually through the currencies, you will find currency pairs that make a lot of sense and that will just stand out and you go, you know what, this thing's looking pretty good. I mean, look how tough the battle was here today on dollar yen. Right, the Nikkei had a massive charge. It was due to open up about 340. It's up about 580 at one stage. See how that trend line was just holding it. That's what we call the barroom brawl, right? You'll find this on a lot of trend lines. Now, the whole net result here, if we come back over to just get up my yen template. Now, you can piece this together, and don't forget, if you're a new trader, don't worry about sort of, get going massively upskilled. Nikkei closed up 590 points. Okay, so that's a massive good day for dollar yen. Okay, now it's above the trend line, it's above the cloud. There's a chance for this thing just to run to the top side. Absolutely. I would be thinking this thing just keeps going from here. So once again, it's trade selection. Get knowledge about your technicals, get knowledge about your fundamentals, get your capital structure, analyze your losing trades. That's how you get better. And that's how you have less losing trades. I was lucky enough to come through the banks for 20 years, and I did all my losing trades there. Right? That's how you lose. That's how you learn how to trade. Unfortunately, if you're trading for yourself, you probably don't have the luxury to start throwing money around all the time. And that's why the sort of knowledge and experience that we're presenting has a bit more sounding, because it's like we've done all the hard work, but we didn't even have to pay for it, which is good. Actually, we're getting paid a lot to do it. Okay. Peter's got a question here. Did you move your stop loss and target? do you move your stop loss and target on average? How many trades per day? Actually, that's a really good question, Peter, because today, if I just get up the, let me just bring over the trade zone, the 24-hour trade zone. Okay, this is what I had in the market today. I've still got the euro sterling position going, and I had sterling. So these are the orders I placed. Now I put these in at 9:30 a.m. I only had 2 trades today, and the only reason I had 2 trades is because these ones look good, right? The other currencies, I was like, geez, I'm not really sure what's going to happen on dollar yen. Okay, because of the correction in the oil price and the CAD, I was like, well, the dollar yen, the Nikkei could really have a big charge to the top side, so I didn't want to get short, and I wasn't real confident with it going on with the trade, so I stayed back and just watched it every couple of hours. So one thing here is, how many trades do you have a day? Well, you have as many as that are presented. Now, if you've got 5 or 6 trades in play, as in orders all over the shop, probably when you get 2, you want to start, considering closing the other orders, because you don't want to have too much exposure. Now, what else do we do here? Now, there's one other thing that we do use, and we do move our stop losses, okay? We don't necessarily move our target, but what I will do is I'll come back after the position has been set, and I will reassess the overall performance of the currency, right? So if I just come back over here, now one of the things that we use, and this is actually a pretty good question, with these trend lines, okay, so even with this trade here, this is the trade I did in sterling today. Now you can see where my execution was. You can see where my stop loss was raised to break even. My take profit was originally up here. It looks like I would have just almost taken profit just then. So I didn't really maximize the opportunity. It is pretty much overbought at the moment. So what I'm looking for here is, the way I put this order on, I used a tool we've got, which we made, whoops, wrong one, called Trendline Trader. Okay, now this thing here does all the movement for us. Okay, so what I do is I stick the order on, it attaches to the trend line. So what you can set up, and this is what you need to do structurally, having something like Trendline Trader allows us to not spend endless hours in front of the computer. You can have a take profit and a stop loss. You can also have a split P&L. Okay, maybe you take some cash off the table at 30 points, maybe 50 points, maybe somewhere else. Now, then you can also we have 2 or 3 stop moves during the position. So as that trade goes up, my stop loss was initially raised to break even. It was probably just unlucky not to get moved 20 points in the cash as soon as that order was, well, I've actually had it at 35 points, funnily enough. That's probably why it didn't get moved. But what we would do is, as the position goes in your favor, we don't move the target, but what we do is we adjust the stop loss, right? I'll adjust it 2 or 3 times, and I'll be using this tool to do that for us. Okay, so what that enables you to do is, if you've got good technical analysis, right, and you've got the right trade tools, then you can actually come in here and start looking at the, this is what professionals do. You put the trades in the market, let the market do the work for you. Don't sit in front of the screens, because you'll close positions out, or you'll just get confused with what's going on. All right, so once again, if you want to come back and check out that the software, I mean, this is, if you don't have, and this is a matter of fact, as I'm saying, you can go and find things all over the net. If you don't have a tool like Trendline Trader, you are not trading that much, okay? Or what you've got to do is, you've got to sit in front of the screens for 6 or 8 hours a day, waiting for the opportunities to happen. This thing here allows us to do our analysis within 20 minutes, put the orders on, and then go about our day. If there's key economic numbers coming out, we will come back and check this out, but this is the main sort of tool you need. And if you haven't got this, go and find something that does the same sort of thing. I haven't seen it, but I'm sure there'll be something out there. It's just an expert advisor that we had built primarily for our trading team to enable us to trade when there's, so we don't sit in front of the screens all day. Okay, so that's it, Peter. So on average though, how many trades do we do a day? Well, pending orders, which are probably technical trades, maybe I'll probably put 2, maybe 3 on if the trade setups are good. If there's no good setups, I won't put any on. But then just trading, I may find 1 or 2 pairs. If there's key economic numbers coming out, I may end up doing like 10. 10 trades around the release and then trying to take some extra cash out of it. Okay, now one extra thing here. Okay, Damien's got a good question. If you're getting stopped out around trend lines only to see price to go in the anticipated direction, should you widen your stops and reduce your position size? Absolutely, Damien. What we have is, and this is the structure of what I use, and I call it a generic trade plan. It's a 25-point stop loss and a 75-point take profit. Sometimes that thing just gets run over, right? So widening your stop loss out is absolutely important. Now, don't go straight to 50 points or 100 points. That's sort of crazy because you'll have to reduce your trade size too much. But go to 30, go to 35, right? If you've got a stop loss bigger than 35, you're getting the entry wrong. But that's right. We had a situation, I reckon 3 or 4 months ago, where I must have had about 4 or 5 trades in a row which went my way, but I was getting stopped out by 1 or 2 points. So what we did is we just widened our stop loss out, reduced our position a bit. Or the other thing you can do is just make sure your take profit is increased as well. Keep that risk reward ratio of 3 to 1. Yeah, that's right. So that 25 points can be a little bit tricky there. Now, one thing that we've got is a question about the new program we're offering. What we've done is we've partnered with a bunch of international brokers they've come through and analysed our stuff. They know what we're doing and how we do things. These guys are actually now, if you're on with one of these brokers, and there's a couple more that are coming online actually. So if your broker isn't here, give us a shout and we'll contact them. But what they will do is, as you trade, you will earn credits to buy either strategies or go to the workshops or whatever it is. Okay, we are starting to run the 2-day Pro Trader workshop. Now, if you want to go to the events thing, just under the trade ideas, check this thing out. It's actually going to be pretty awesome. Because now what we're doing is, on the day one, we're going through the Pro Trader program completely. Okay, we've got this one coming up in London. There's going to be one in Sydney just shortly afterwards. What we've got is the structure of everything we're doing. If I just come down here, we're not only going to take you through the program, we're going to take you through the advanced trading strategies as well. Anyway, go back to the site and check that out. It's actually pretty good. So which brokers do we use? Jefferson was just asking there. I mean, most of them are pretty fair these days. Now, there's a couple out there who can be a little bit dodge. And what I'm saying is some of them widen out the pricing. Other ones, they're there. They want you to be successful. And these companies we've partnered with, they want you to be successful. All right. So just come back through these and check them out. Go into the opportunity. Actually, let me just come back to one step. That's actually opening the account. Now, check out these things. Actually, the funding bonus. If you're looking for some bonus, like our Pro Trader program, right? And I know everyone's very conscious about price. We've actually ripped a few components out of it, a lot of the support stuff initially, and it's now only $1,500. If you fund a trading account with $5,000 with any of these brokers, right? They will credit your T4T members account with $1,500, and you can go and buy software, you can go and buy the strategies, you can go and buy the course, you can do whatever you want. You can actually go in here, once you go into the members area, right, you can go into your wallet, and this is where we will credit your account just by funding your account. Now, don't forget, you need to have a trading account to trade. So what we've done is we've tried to make it as easy as possible, which is take out the cost of the program. So what you can do is, just by opening a trading account, you can get access to the various aspects. And then as you continue to trade, right, you trade 10 lots, you earn another $50 of credit. And you just keep going. So you can actually come to the workshops, you can come get the training, you can get the strategies, you can get the software, you can get everything here through the brokers. And Pepperstone will probably be on next week, I would actually say. They are one of the companies that we have spoken to. They are keen to add the thing. That should be there next week as well. And then once you've got these things, then you can come back in. As I said, what we've done is we've worked out these relationships with the various brokers. And as I said, if your broker isn't on this list, give us a call, send us an email. We'll go and ask them and say, listen, we've got a few of your clients who are looking to get involved here. They will all do it because it's a win-win-win for everyone. All right. So once again, you can come back. And this is what you can do. And I've been talking a lot about capital management. Even if you didn't want to get the whole program, you can just come back in and get this thing by itself, or get the complete Pro Trader just by funding an account. Okay. Keith's got a good point there. Now, euro sterling's just gone south. What would have happened there is, and this is a bit of a bummer, I've been waiting for this for a little bit actually. See how sterling popped up there? There is a massive daily trend line there on euro sterling. So this is the risk that you take. You put the orders in and you live by the positions. Now, one of the things you're looking at is, okay, so the trade here, okay, it's a big trend line. There are stop losses under here. You know what we need? All we need is one mention of Brexit and sterling comes off 200 points. Euro sterling's up 100. And that's what I'm sort of looking for on the trading opportunity. So one thing that you have to look at is, you know what? Sometimes these trend lines, I mean, the whole structure here is very nice. Okay, the only thing that hasn't worked nicely for the euro sterling, okay, if you're looking for an answer, is if you come back over here to euro, and it's these ZOO numbers, okay. The economic sentiment was a little bit higher, but the current conditions are a little bit weaker. It's a bit of a mixture there of the fundamental driver of euro, and it's just held up. The one reason why we want to get long euro sterling is because of all the anti-negative comments about Brexit. It hasn't come out today, but it will come out very shortly. And I'd say that's just a bit of a stop loss run. And the other thing here as well, Kid, I hope I'm saying that right. See how this second trend line, see how it stopped there initially. Once again, this is correct technical analysis, right? So it stopped there initially, then they've blasted it through. I wouldn't be surprised to see sterling crap back out here and just come off. All right, looks like a bit of a double stop loss run as we've gone through the day. All right, so that's pretty much it. So there's a number of things you can do to fine tune your whole process. Okay, if you are having losing trades, get some structure. Technically, fundamentally, decrease your trade size, analyze your performance, improve your overall results. Okay, how can you do that? Get more information about these fundamentals. You know, that question about the Kiwi was a very good one. I mean, about the dairy prices, because this is important for that Kiwi. Get yourself some analysis. Get your trade station hooked up to a platform. Make sure you're going through the various aspects. If you want some more information, give us a call. We're here to help you. That's the whole thing of what we're doing. It's actually trying to help you, you know, give you structure, understand why the prices are moving, get the orders in the market. Now, this is the other thing too. The last thing I'll leave you with, not every trade's going to be a winner. You need to understand that before you place the first trade. But once again, if you can analyze and you've got the right entry, the right technicals, and you've generally got it called it right, well, over the course of time with consistency, you will make a lot of money. Okay, that's the most important part of it. All right, it's all about the structure. And as I said, just to finish up, if your broker isn't on this list, as I said, there'll be a few more there next week. If they're not at the top, they'll be down in the footer actually, because the sort of first in, best dressed at this stage. So have a look at that. Give us a shout if you've got more questions about the program or anything else, or you've got more questions about what to do when you're losing. Give us a call or send us an email, and we'd be more than happy to help you. All right. Thanks for everyone for joining me. This has been a pretty good session. You've asked some very good questions. Like, I know trading's difficult. Okay, it's not always easy. Sometimes it is, sometimes it's not. But having some help and assistance and knowing that you're doing things right is the main part of it. All right, guys, thanks for joining us. Appreciate your time. As I said, any questions, give us a shout. Those members will see you in the trade zone. Don't forget, I mean, there's plenty going on. So we'll just keep up to speed with what's going through there as well. All right, guys, thanks for joining us. We'll catch you later on. Cheerio. All right, thanks, Casper. Cheers, Jefferson. Do you run scholarships for overseas? Well, Jefferson, not really. We've done some programs before, but we haven't actually got any scholarship programs at the moment. But funnily enough, those brokers, these are international brokers. So all you have to do is, if you can fund an account, you can get access to the programs for nothing anyway. Okay, and that's pretty much like a scholarship. You're in Brazil, mate. I love Brazil, and they've got some great surfers. All right, guys. Cheers, Rob. We'll catch everyone later on. Good to see you all.